Hello students, welcome to Mastery in Commerce. Today we are going to start the first chapter of accounts, which is Introduction to Accounting. As it is a new concept for all of you, so first of all it should be clear to you that what is an accounting. So in simple words, if we say accounting is the work of recording all the transactions. Recording all the transactions which involve money. So whenever we are talking about giving or taking of money, that is transaction. Suppose I go to the market and purchase furniture for my business house. So it is a transaction. It is a transaction. Why? Because to get furniture I have spent cash or I have taken on credit. So if it is on credit or cash, then it is a transaction. And please note that the transaction involves something related to business, not a personal expenditure. So if any personal expenditure is done, then it is not a transaction. Now next is, in your book the definition is given by AAA. AAA means American Accounting Association. Which is applicable all over the world. So please underline that definition which is given in the book, which you have to write in exams to increase the value of your answer to score better. So the definition is, accounting is a process of identifying, measuring and communicating economic information to permit informed judgments and decisions by users of information. So this definition you have underlined, but the first thing which we have to take care of, that what are the points covered by this definition. Meaning of definition should also be clear to you. Just learning it up and writing in exam is not enough. So what points are covered by the definition? First is, there should be economic events. Economic events means there should be money involved. So whenever we have money involved in our transaction, then it is economic event. Second is identification, measurement, recording, identification, measurement, recording and communication of information. So it is very necessary that accountant should be capable to identify the transaction where money is involved. He should be able to measure it, means how much currency is being used. He should keep a proper record, because even if one transaction he misses out, then the record goes incomplete. The next is communicating to the users. Who are the users? That detail we will see later. Now we go to what is the next step covered in the definition. The definition has the next point as organization. So organization means what? That it should be for a business enterprise. So if your mother is maintaining the budget of the house, then no need to hire an accountant. So accounting is always done for a business enterprise, for a establishment which is working with the motive of profit. Next is interested users of information. So the accountant has to prepare the record, keep the information, and also tell the information to the interested users. Now, who are these users? That is very important. Those who want to go in detail of the accounts, why they want the detail of the business, why they want to know whether business is profitable or not. You and me, if we don't have money and we are not interested to invest in market, why will we go for it, right? So the basic thing which we should know, who are the users who are interested to know about the business house. So first we have owners or shareholders. Owners or shareholders are the people who own the business or those who have spent their money in the business. So they want to know whether that business is working in profit or not, whether they are able to earn properly or not. Then we have next directors or managers. They are the policy makers. We know that in every business the director or the manager make policies for that business. So if he is not knowing about the accounting position, how will he plan for the future, or how will he compare present with the past? So this all category have this is the category of the users which makes the policies. Then we have creditors. Who are the creditors? Who lend money to the business. So they are the lenders. Now you are giving money to someone. First of all, obviously you will find out that person is financially stable or not. Otherwise you will not give the money. Why will you give money to a person who will not return, right? So then we have investors. Every business house needs investors. You all know very common example of Ola. You have seen Ola's business is growing rapidly in the market, but Ola cannot do everything on its own. It needs investors to invest money in its business, and then Ola promises to give some share of the profit to the investors. So investors will keep an eye on the profit of the company, whether company is earning profit. Yes, if earning profit, then they will be ready to invest in it, right? Now, government and regulatory bodies or agencies. You all know government is to always keep an eye on the business houses to find out that the taxes which they are collecting is up to mark or not. Every company is paying the taxes properly or not. Now come to test your understanding part 1 on page number, it is 7. Page number 7 of your book. I will be giving you the answers of the same so that you can complete your notes which are given inside the chapter as well, right? So now we have page 7, the test your understanding. So test your understanding part 1 answers I will be giving you so that you have no confusion. The first one is information in financial reports is based on the needs of the users. As the user want, they will be using the information for that particular purpose. Internal users are the dash of the business entity. So that is decision takers or makers, means the same thing. So they are the decision takers of the business. A dash would most likely use an entity's financial report to determine whether or not the business entity is eligible for a loan. So who gives a loan? Creditor. Please write the answers when I am telling you here. Creditor. The internet has assisted in decreasing the dash in issuing financial reports to user. So internet has played a major role in passing on the information immediately to the users. So it has reduced the time gap. next we have dash users are groups outside the business entity who uses the information to make decisions about the business entity. So whoever is outside is external user. Now next, information is said to be relevant if it is dash. So it should be appropriate. It should be free from bias. It should be accurate, timely. So anything you write in the blank is correct. Seventh is the process of accounting starts with dash and ends with dash. So accounting starts with a transaction, which I told you earlier, right? As transaction takes place, accounting starts, and it ends with the financial statement. Financial statement you will be studying later in accounts. So financial statement actually tells the financial position of the business. Next is accounting measures the business transactions in terms of monetary units. Always money is involved. If money is not involved, then it's not to be recorded. Identify a major economic event should be recorded in chronological order. Chronological order means in sequence. Okay, so it should go in sequence. Thing is purchased, then raw material is purchased, then it is machinery is purchased to convert that raw material to finished product. So every detail should be in sequence. Now we come to branches of accounting. I hope everyone has written this. So branches of accounting are basically like accounting is a tree and it has its 3 branches. It has 3 parts in which it is divided. So branches of accounting are which deal with 3 different aspects. The first one is financial accounting. Then second is cost accounting. Then third is the accounting which is dependent on both of these, that is management accounting. So financial accounting keeps systematic record. Keeps systematic record of all the transactions. Then cost accounting takes into consideration the cost incurred. Cost incurred means whenever any good is produced, how much are we spending? Okay, so cost incurred in product or service. Product or service. If you take your career higher in the commerce stream, then these will be separate subjects which you will be studying. You will be having financial management, then you will be having cost accounting. In that, what kind of accounts are prepared. So those different things will be taught to you in further grades. So again, these will be as the subjects. Management accounting is dependent on both of these. So whatever data they both provide, accordingly, the management accounting deals with the policies and the strategy which is to be made, where you make like budget, right? Then they plan for how much expenses are to be incurred. So everything is done in management accounting, where they plan for the future course of action, right? Now next we have the important things which are given in your book. The qualitative characteristics of accounting: it should be reliable, it should be relevant, understandable and comparative. So what is the best quality? Qualitative aspect meaning you should understand. Qualitative aspect means that what should be the quality of the accounts which we are maintaining. So first thing is it should be reliable. Means whatever data is given by the accountant, the user should be rely on it. They should not think that no, maybe the information is not correct. They should be able to rely. Then next is relevance. When I want to know something about a business, so that relevant information should be available. It should not be a vague information. Then understandability. Understandability is that whatever information is given, it should be understood by the users. It should not be inappropriate, or it should not give any other interpretation, right? Then it should be comparable. Comparable means it should be on a common period and common unit of measurement. Common period and unit of measurement. So these are the basic qualities which everyone is looking in a good accounting, right? So now you see, test your understanding 3 on page number 12. Test your understanding 3 on page number 12. Now they have given you that what kind of stakeholders will be interested in these kind of informations. Now users, see, I told you this is a very important question. Who are the users? Why they need the information? Those all things should be recorded in the business transaction. So first one is the VAT and other tax liabilities of the firm. Who is interested? Government and other regulatories. Then second is the potential to pay award and bonus deal. So union and employee are interested. You know what is a union, I hope. Union is the body which takes care of the employees, which takes care that employees are getting proper remuneration for their hard work from the management or not. Then third is the ethical or environmental activities of the firm. So social responsible groups. Always these groups keep an eye on your business, right? So you are maintaining your business according to the society or not. This will be checked by people you are even not aware of. So we have to run your business very ethically. Fourth, whether the firm has a long-term future. Who are interested? Lenders and financial institutions. Lenders and financial institutions. Then next we have profitability and share performance. Who will be interested? Investors. They are interested to know the profit of a business. The ability of the firm to carry on providing a service or producing a product is taken care of by customers. So customers are interested to know whether this business will continue or not. Okay. Now there is one more test your understanding. Fourth. This was third. Now you have fourth. They have given you what your understanding is. Which of the following is not a business transaction? So whenever any personal bank account is being taken care of, any personal expenses are taken care of, then it is not a business transaction. So in this, the third part, please take paid son's fees from her personal bank account 20,000. That is not a business transaction. Deepti wants to buy a building for a business today. Which of the following is the relevant data for his decision? Now over here, decision which is now if taking, then the latest information is helpful. So latest information is the fourth point. Which is the last step of accounting as a process of information? So last step is communication of information. Means everything is being analyzed and then communicated to the users. Fourth, which qualitative characteristic of accounting information is reflected when accounting information is clearly presented? So it is comparability. Please mark the C point, comparability. Use of common unit of measurement and common format of reporting promotes Comparability, because then it becomes easy for us to compare. Now there are certain terms which are given to you on page number 14 to page number 19. They are very important terms. You have to read them and try to understand what is the meaning. Entity means, page number 14 of your book, please see. Entity means a reality that has definite individual existence. So whenever any business is running, then that business is a business entity. Then we have transaction, which I have already told you, where money is involved. Assets are, see, if I have lots of jewelry with me, I have my car, I have my house, so those are my assets. So for a business house, what is an asset? For the business house, the asset is are his building, his furniture, machinery, then the debtors, right, who are going to return the money. So those all things come under the category of assets. Then liabilities, the name say, liabilities means the money which we have to return, means we are liable to give it back. So liabilities term will be again and again used in accounts. Then we have capital. So what is the capital? The money which I invest in business, that is capital, right? I have 1 lakh rupees with me. I am going to start my own business. So that 1 lakh is the capital of my business. Then sales. Sales are whatever I have sold in the market is sales. Revenues, it is the amount earned by selling a product. That is revenue. Expenses, whatever money I have spent in producing a product, that are expenses. Expenditure means spending money or liability. So expenses doesn't include liability, but expenditure include liability. Profit, whatever I have sold, after deducting cost of production from it, I get my profit. Next is gain. Profit that arise from event or transaction which are incidental to business, means suddenly I got it, that is my gain. Gain and profit are very closely related to each other. Loss is when you put some money in a product and it went in the market at a lower price, then you get a loss. Then discount is the deduction of price. You know, lots of discounts are given to you by the business houses where you go and do lots of shopping. So discount is the deduction in the price. Voucher is kind of bill, right? In the next chapter we will be seeing how the vouchers are prepared. So it is a kind of bill. Then goods. Goods are the products. Whatever products we are dealing in business, that is a good. Drawings is from the business capital. If I take something for my personal use, then it becomes drawings and I am liable to pay it back to the business. Purchases, whatever raw material I have purchased, that are purchases. Stock is a whatever things I have in my godown lying which can be used by the business, those are goods. Debtors, the people who will give me back. Creditors, to whom I will pay back, right? So this brings us to the end of the video. In the description, I will be giving you the answers to all the questions which are there in the book. Although on net nowadays everything is easily available, but still I will be providing you with the answers so that you may take the printout and learn for that. Now I request you to please like, subscribe and share this video. If you really find it wonderful and understandable, please wait. I'll soon be uploading the next video. Thank you.